Next, let's look at the credit score range. Typically, it's ranging from 300 to 850, but different scorecards, they have different ranges. We have a few examples on the right-hand side. For example, FICO score 8. That's based on Fair Isaac model, version 8. The score range is 300 to 850. Then you have a FICO mortgage score. Okay, scorecard developed for mortgages only. Same range, 300 to 850. FICO auto score for auto industry. It's 250 to 900. The score range is a little bit wider. FICO bank card score for general purpose credit card issued by banks such as a MasterCard, Visa. Also, the range is 250 to 900. So the ranges are slightly different depending on which scorecard. Higher scores usually mean better credit and lower risk. Generally, this is the case. Although there are some exceptions, some modelers they choose to use high scores to represent higher risk. You have to read the documentation for each scorecard before you use it. Let's look at FICO score. This is from Experian as an example. The top 21% population, their scores are from 800 to 850. That's considered exceptional credit. Next 25%, 740 to 799, still very good. Next 21%, score ranges from 670 to 739, still good credit. Next 17%, 580 to 669. These are fair credit. Usually, you will see the minimum score cutoff in this zone, depending on each lender's risk appetite. Some might choose 620 as the minimum score cutoff. Some might choose 600. The last section, 16% score below 580. These are poor credit consumers, also known as the subprime or deep subprime. Usually, they do not get approved. So what to go into the credit score? What drives the value of each credit score? There are a lot of different factors or predictive variables. If the score is developed by FICO and credit bureaus as an industry score, usually they do not share the specific factors or credit attributes. However, they do share at a very high level what areas these factors are related to. Okay, let's look at the FICO score from Experian as an example. 35% of factors are related to payment history, most influential. That makes sense, right? If this consumer pays the bills all the time, then very likely the consumer will continue to do so. Next, 30% factors are related to amount owned, highly influential. If you own less balance, more likely you would be able to keep up with the payment. If you own too much debt, then your risk is relatively higher. Okay, so then we have credit history. That's 15% of factors. This is considered moderately influential. You have a long history, 10 years credit history, then your risk is low. If you just have a less than 1 year credit history, so not established yet, your risk is relatively high. Okay. Next, we have a credit mix, 10%. That's less influential. Do you only have a credit card, or do you have a personal loan as well? Or do you have a mortgage? That indicates different risk levels. Last, 10%, new credit. This is also less influential. Have you applied for some new credits in the past 6 months? Have you opened too many credit cards in the last 3 months? Those will impact your credit score. Okay, so this is just a nutshell. What are the factors contributing to a score's value?